All right, guys. Well, sorry about that. I just had to restart and reboot a few things here. I'm not sure what they were doing to us there. So I'm really, really sorry about that. So, okay. Well, let's go. Let's dig in here and try to catch up here. All right. So, real quick, what I was showing you a second ago, make sure you open a demo account with Nadex. And once you do that, hop on over to apexinvesting.com, get a free username and password there. Go right here to Start Elite Education. You can go under Nadex Spreads or Nadex Binaries. And either one of those that you're looking to trade, spreads or binaries, everything you need is right there. Tonight we'll be talking about spreads. You literally can click on the spreads right here and hop right here into quick getting started video, opening accounts with Nadex. Nadex Spreads 101, complete step-by-step training course here where I literally go through an introduction to Nadex, some live trades, what are spreads, how do they work, risk and reward, everything you would need to know, okay? Everything you would need to know there about trading spreads. And then it goes right into some different spread trading systems, which I'll reference a couple of these tonight real quick. So if you're trading Nadex spreads, there's a ton of information on our website, literally hundreds of hours of free education, but you don't have to get all wrapped up in that. You can just go right into Nadex spreads, or if you're trading binaries, same thing. Go right here into binaries, step-by-step trading courses on binaries, and right here, the different binary trading systems that we use, okay? So feel free to check that out. A couple of you have asked, hey, is this webinar going to be recorded? Yes, if you go right here over to the Help Desk and Forum tab, right here, Trading Questions Forum. If you just click that, there's a lot of good information here in our forum, but and it's broken down into different sections, but if you scroll down towards the bottom, you'll find a section that says Watch Webinars Here, okay, and that's right here under Newest Webinars. That's where this webinar will be later tonight. So take advantage of the free demo account that Nadex gives you. Hop on over to apexinvesting.com, take advantage of some of that free education and learn about binaries and spreads and different trading strategies and systems there. One of the other things you'll want to check out, and I'm going to show you this here in a little bit, on the Apex website, if you're on the home page, go right here under Access Free Tools, and you go right here to Scanners. We have a free binary and spread scanner. Tonight we're going to be talking about spread, so I'm going to click on that real quick here, and you'll just have to, sign back in real quick. Basically what the spread scanner does, we got binary or spread scanner. For example, let's say that we were trading spreads, right? And we want to trade some spreads tonight. You're on the Apex website. So let's say you go to Forex spreads and you want to trade the euro dollar. Okay, well, it's going to pull up all these different spreads. You've got some spreads here that started at 6 p.m. and they'll expire at 11 p.m. You've got 2-hour spreads that go from 6 to 8. You've got some others here that go to 7 to 9. Then here at 8 o'clock, we'll have some new ones that go 8 to 10. And we've got our daily spread. If you click on each one of these, you click that one, you've got 3 different options of spreads. And notice you've got a floor of 10.10 and a ceiling of 12.60. Then you've got this different spread and this different spread. Then you click on the 6 to 8, you've got 3 more to choose from. Click on the 7 to 9s, you've got 3 different ones to choose from with different floors and ceilings. And you've got your daily spreads. You've got all these different spreads and you're like, okay, which one do I want to trade? Well, I forgot. What was here under 6 to 11? Okay, I've got these different spreads with these floor and ceilings, and here's the price I can buy or sell for. Then I've got these other options here. Okay, well, which one's a better price? Which one's a closer proximity? Then what do I have? 7 to 9. Okay, wait a minute. I forgot what 6 to 11. You're going all over the place, right? Back and forth. Well, with the spread scanner, you can pop right over here to the spread scanner, and you can just simply say, okay, I want to trade the euro dollar. You click euro dollar, and it pulls up all the available spreads all on one page. See, right here are the spreads. You've got your floor and ceilings. These expire at 8 o'clock. You've got the floor and ceilings of your spreads right here. These are the ones that expire at 9 o'clock. These are the ones that expire at 11, and that's the daily that goes till 3 p.m. tomorrow. And you can see all of them in one place here. Right here's the offer side. You can see what you can buy each one of them for. Right here's the bid side. You can see what you can sell each one of them for. And they're all together right there for you in one easy place. And this is a free tool, okay? This is a free tool that you can use as a free member of Apex. You can use this for binaries or spreads. Also, the other thing is sometimes some of you are like, okay, well, I just want to make sure, like if I were to buy this spread, how much money do I have to put up on margin for this spread? And what you'll do is you'll open a ticket and you'll act like you're going to buy it just so you get this part right here to come up, right? Okay, max loss 136, max profit 114. You have to actually open a ticket and act like you're going to buy it for that to come up. And you might be like, okay, well, no, that's not, I don't want that one because I don't want to put up $136. Maybe I want to put up less than that. What about this one? What does this one do for me? Oh, okay, 15. I like that one. But you're having to go back and forth and click and open these tickets to figure that out. On the spread scanner, you don't have to do that. It's all right here. See this? What do you think the red number is? Risk. What do you think the green number is? Possible reward. What do you think the red number is? Green number is. It's right there. It tells you right there what is the potential risk and potential reward. So you can look very easily and say, okay, if I want to buy a spread, to buy this big daily one right here, I got to put up $309. Here I got to put up $14. Here I got to put up 135, 248, 12, 6, and so on. Everything is right there, all right in front of you on one page, okay? And just going to the spread scanner shows you all of the different options there. Now I'll show you where you can go through a step-by-step training course of how to use this, okay? You can pull this up where it will show you everything, or yes, Ben, you're asking right here, you can say you want in the spread, deep in the spread, you know, near the market. What are the spreads that are right near the market? What are any spreads that are out of the spread, meaning the market's outside of the spread, or they're in the spread or near the market? You can kind of narrow that down for it to show you only certain ones. Like if I said I just wanted, you know, near the money or near the market, and I only want to look at the buy side. Well, it narrows down my options and only shows me the buy side. If I only want the intraday ones and not the daily, it takes those off. So it's just some filters there, okay? But I'll reference this a little bit more later, but it's a great tool for you there. And also what you can do when you're on the Apex website here, again, remember I told you right here, everything you need is under Elite Education. Go to Nadex Spreads, and then right here, the Nadex Spread Scanner course. That'll go through and show you exactly how to use that. But it's a great tool for binaries or spreads to be able to easily find the best ones, okay? And a lot easier than going back and forth on all the different tabs of Nadex than trying to remember what was the floor and ceiling and what was the price and how much do I have to put up. Everything's just all right there for you, okay? So tonight we're going to talk about some directional trading with Nadex spreads, picking the right spreads, how to limit your risk and increase leverage. And for some of you, spreads are new. You're familiar with binaries. Maybe you've even traded some Nadex binaries. But when it comes to thinking about and learning about or even trading spreads, you have to take your mindset away from binaries and away from being a binary trader. Okay, binaries are a simple yes or no, true or false statement. The difference of one tick or even 1/10 of a tick can be the difference in you winning or losing that trade. It can all come down to 1/10 of a tick. If you go and you buy an $80 binary and the market expires 1/10 of a tick below your strike, you can lose the whole thing. You can lose the whole $80. It's an all or nothing type scenario if you hold it till expiration. And binaries are more of a statistical trading vehicle. They're a volatile trading vehicle. But if you're looking for a simple, easy way to trade charts, okay, let's say even if you're brand new to trading and you don't want to, you know, have to get involved so much in the, you know, true and false statements of binaries and the all or nothing type situation with binaries, you want to be able to learn to mimic the market and trade a chart, okay? Well, you can do that. And the benefits of spreads versus binaries is, again, it's not all or nothing. With spreads, one tick is $1. One tick does not mean, one tick means the difference of $1. Does not mean the difference of all or nothing. And I know binaries are the buzz and binaries what's exciting. And, you know, binaries are easy to understand, you know, for a newbie to understand what are they. But binaries are much harder to trade because you have so many different binaries to choose from. You have in the money and out of the money binaries. You've got different time to expiration. You've got time decay that affects you. And the market can be going your direction for a little bit, but then it turns against you and becomes a loser. That's just trading in general, but spreads are harder to understand up front at times, but they're much easier to trade, and they're definitely much easier to trade to mimic the market. Once you get a good understanding of them, you'll love them. Personally, I feel that most beginners and even intermediate traders and even pro traders should be trading spreads as opposed to binaries, especially with smaller accounts, okay? It's not always as easy to risk 15 or 20 bucks on a binary to make 15 or 20 bucks on a binary. It's much, much easier to do something like that, like on a low or smaller account with a spread, even with not a whole lot of movement. Now, I'm not going to spend a whole lot of time tonight on covering the basics of spreads. We're going to just run through it briefly. If you're brand new to spreads and you're not real clear on what they are, go right here to Elite Education, Nadex Spreads, and you can go through a Nadex Spreads 101 course, all right, to get the full details of how spreads work. But just a very, very quick review is all we're going to do here tonight. What are spreads? Well, Nadex calls them bull spreads. I like to call them box spreads because if you draw them on a chart, they kind of look like a box. The way a spread works is it has a top and a bottom, or what we call a floor and a ceiling, okay? Let's just say, for example, we're looking at a spread on the euro dollar, and the bottom of the spread, the floor, was 1.2400, and the top of the spread, the ceiling, was 1.2500. So the spread is the difference between the floor and the ceiling. So basically, there's 100 pips in this spread, okay? And everything moves in pips or ticks. Pip is the last digit quoted. And each pip is worth $1. Technically, there are 100 pips in this spread. So it all depends on where you buy or sell into a spread. Now, one of the biggest things about Nadex spreads and any Nadex product is the fact that there's limited known capped risk. Okay, if you're in a trade and you're trading spot Forex, for example, and the market flies up 500 points or flies down 500 points or goes against you 100 points, okay? Well, you have, in a sense, unlimited risk. But with Nadex spreads, you have capped limited risk. And that's one of the really nice things about these Nadex spreads is, for example, let's say that we were going to sell. We're going short. We think the market's going down. Well, let's say we're wrong and the market goes up. Well, I can't lose additional money above the ceiling, okay? And I don't get stopped out. My trade's not automatically closed. Let's just say that right here, for example, I were to sell because I think the market's going down. But I'm wrong, the market goes up. And it goes all the way up to the top, to the ceiling here, okay? Well, so I thought the market was going down, so I sold, but I was wrong. The market went up. So I lose $1 a tick as the market goes up, but as soon as it hits the ceiling of the spread here, I don't lose anymore. I have a limited area where my risk stops, okay? So even if the market goes hundreds of points against me and keeps going up hundreds of points, I don't keep losing money past the ceiling of this spread. But also, it doesn't just close my trade out when I get to the ceiling of the spread. My trade is still open until expiration or until I close it. I also can't make additional money below the floor of the spread. Okay, so how does this work? Well, let's just say, for example, that I sold right here at 1.2490. So I'm selling, saying the market's going down. Okay, well, I sold at 24.90. Where is the top of the spread? 2,500, right? So the top of the spread, the ceiling is 2,500. I sold at 24.90. So I sold 10 pips. The difference of where I sold at compared to the top of the spread is 10 pips. So the very, very most that I can lose on this spread is what? 10 pips, which would be $10, right? Because with the spread, it's $1 a pip. Okay, each pip is worth $1. There are 10 pips. So the cost, the amount I got to put up to get in this trade, the cost and my maximum risk is only $10. Now, going down to the floor of the spread at 2400, I sold at 2490. I can potentially profit all the way down to the floor of the spread, which is 2400, which is 90 pips. So there's 90 pips of potential profit, each pip being worth $1. So potential profit is $90. Now, what about the reverse if I was buying? Well, if I'm buying, I'm saying the market's going up. I cannot make additional money above the ceiling of the spread. And if I'm wrong and the market goes down, I can't lose additional money below the floor, and I don't get stopped out. So another example, if I were to buy right here at 2410, saying the market's going up, well, when I buy at 2410, the floor is 2400, so there's only 10 pips difference between where I bought and the floor. So my maximum risk in this example is 10 pips. And again, I can't get stopped out. So like right here, if I bought at 2410, what did the market do? It ended up coming down first, right? It went against me first. But I only lose money down to the floor. It could go way down here and I don't keep losing more money. It also does not automatically close the trade, which I'm glad for, because why? What happened? The market came back up to the floor, came back up, and ended up going all the way up to the ceiling. Okay, so do you see the power of that there, of having capped limited risk, but with still a good, profit potential reward, good ratios, good leverage, but I also have that protection of capped risk. All right, and I can buy anywhere in between here. All right, so whether I buy here or buy here, it just depends on where the market is at that time. Okay, so I can get into the trade and get out of the trade anytime. Now I can hold the spread until expiration, okay, or I can exit early. Let's say that right here I got into the trade and I sold, saying the market was going down. But the market kept going up, and it went up against me by 20 ticks. So I was down $20. Well, I don't know if the market's going to keep going or come back. I could just close out of the trade and take that $20 loss, because I don't want to take a full loss, right? Or let's say that I bought right in here at 2410, and the market went up 30 ticks. So I was profitable 30 bucks. I'm up $30 in profit. Well, I could exit right there and just take that $30 profit and get out at that time. I don't have to wait till expiration. I don't have to wait till it gets to a floor or ceiling. I can get in and out anytime, whether the market's going for me or against me. So in this particular example, if I had bought right here at 2410, yes, I technically have $90 of profit potential if the market goes all the way up to my ceiling. But I could have bought here at 2410, and when the market got up to, say, 2460, I'm like, hey, I'm up 50 bucks in profit. I just want to close this trade now. Or maybe I'm up a little bit in profit and the market looks like it's turning around. So I just want to get out and take whatever profit I have then. I can do that. I don't have to hold it till it hits a floor or ceiling. I don't have to hold it till expiration. I can exit early. But if I don't exit early and I hold it till expiration, all right, if the spread expires, it will close at the settlement price at the time of expiration. All right, the settlement price is based on the underlying market. Okay, so for example, let's say that I had bought in right here, and yes, it went all the way up to the ceiling, but then it came all the way down, and it came all the way up, and then it closed right here. Well, if it expired right here, let's just say at 2480, for example. Well, if I bought at 2410 and it expired at 2480, then the difference would be 70 pips. Okay, so at expiration, what I'm going to make or lose is the difference of where I bought or sold compared to where it expired. Okay, so that's the basics of a spread. All right, and again, you can go back in and watch the step-by-step training course to get real in-depth into that, okay? Ahmed, we're not talking about straddles or anything like that tonight. Our webinar tonight is Directional Trading with Nadex Spreads, okay? You can go to the Apex website there under the section I showed you there for Elite Education under Spreads, and there's some more information about that and about some different technicals and stuff, okay? So, All right. So spreads, that's the basics of a spread. They've got a floor and they've got a ceiling. You can buy or sell. You've got capped risk, and it's $1 per tick or per pip. Okay. And again, you've got different spreads to choose from. Here on Nadex, just for example, we were looking at the euro dollar, and you've got different expiration times. Like for example, right now, first of all, any time frames you see on the Nadex website, Nadex platform, are all going to be Eastern time. Okay. So when it says 9 p.m., that means 9 p.m. Eastern. Okay. Eric, this is a Nadex webinar. You'll have to ask us those questions over on the Apex site, and we can get that answered for you. Okay. We can definitely get those answered for you over there. So you've got different spreads. So right now it's about no problem. So right now it's about 7:45 Eastern time. Well, let's say that whatever strategy or system I'm using, okay, whatever indicators I've got on my chart, whatever system I'm using, I think that the market's going up and I want to buy. Well, what do I want to buy? I can buy into a spread right here that goes from 6 p.m. to and expires 11 p.m. So I've still got about 3 hours left. If I think the market is going up, let's just say, I'm just going to show you a random chart here. We'll get into some more of this later. But let's say that I have my strategy or system and I'm, looking at a chart here and something tells me, okay, the market's going down. All right. Like this is one of our, let me show you a different, let me show you a simpler one. Okay. Right here. Don't be too overwhelmed by this chart. Basically, in a nutshell, this is one of our many systems that we use. This particular chart here, so we call our alchemy system. See, for example, right here, when we've got this line crosses this line and everything's green, we buy, say the market's going up. This is just a simple directional system. We think the market's going up. Well, let's look. This was on the euro yen, for example, at 11:54 a.m., saying the market was going up, and it did. It went from what, 123.50 up to 123.95. All right, went up 45 pips, 45 ticks. But look at the timestamp on the bottom here. That trade was about what, 11:54. What time was it all the way to the end of the trend? 1500. That took a few hours, right? You see that? But then sometimes you'll look and you'll see some big trends that just happened in a matter of minutes, right? And you don't always know what that's going to be, do you? So, for example, right now it's 7:50 p.m. Eastern time. Whatever strategy or system I'm using, I get a buy signal saying the market's going up. Well, do you think that I want to choose this 6 p.m. to 8 p.m. spread? Because when is this spread going to expire? At 8 p.m. in 10 minutes, right? Okay. So if I'm trading, if I'm day trading and I'm, trading a system that's kind of giving me the short-term immediate trend of the market, meaning what is the market doing right now? Okay. Hey, my trade may only be 5 or 10 minutes, or it may take an hour or two to make its full move. I don't know. But I want to make sure to give myself enough time to be right, right? So I most likely don't want to choose this spread here that only has 8 minutes to go. I want to give myself a little more time. So I may want to look at going, for the 11 p.m. Or at least this one right here that doesn't expire till 9 p.m. So I've got at least an hour and 8 minutes to be in that spread for my strategy or system to be correct. Or I do have the big daily spreads that go all the way till 3 p.m. tomorrow that I could get into. Okay. Now, for some of you, this may seem very basic and elementary, but sometimes for new people that are trading spreads, when you don't quite get that, there's so many different spread options to choose from that you have to realize just because, oh, hey, this one's only 6 to 8 and I can hop in and get this spread right here and I can buy it. And, oh, I only got to put up like $5. I like that. Okay, well, you've only got 8 minutes left on this spread for that market to make its move. Just because that is simply a low margin you're having to put up does not make that the best spread. And I have a whole webinar, we're not going to be able to get into it tonight, I have a whole webinar where I cover with you choosing the right spreads, not just about the amount of time left to be right, okay, but also as far as which one of these spreads is best for you. There's a top, a bottom, and a middle spread. And I'll show you where that webinar here is. Any of y'all that were on it before said it was a really great webinar that kind of made a lot of light bulbs pop for you. And there have been a lot of you that said, hey, I've traded spreads before, but they didn't really work out. They didn't move enough in the right time for me. And a lot of you realize that most of the time it's because you're choosing the wrong spread. You're either not choosing one with the proper expiration, or you're just taking the cheapest spread available out there with the lowest risk and not realizing that that is not always the best spread for you to mimic the market, okay? And I would definitely recommend all of you watch that video if you're on the Apex website, okay? Because you definitely don't want to be trading spreads without that, okay? If you're on the Apex website, go right here to Help Desk, go to Trading Questions Forum. All right, and scroll down here to the webinar section, okay? And right here, see Nadex Spread Webinars. Click Nadex Spread Webinars. This will pull up a bunch of different spread webinars for you. It's right here, Common Misconceptions with Nadex Spreads. Okay, and that's where I walk through a lot of misconceptions about Nadex spreads, and I cover 99% of the reasons that people don't do well with spreads is because they're choosing the wrong ones, and they don't quite understand spreads. And they don't quite understand why spreads could be priced differently. Okay, just right here, for example, you want to buy a spread. Well, you can buy this one at 1009, this one at 1021, 1024. Well, do you just automatically take the cheapest one, the most expensive one, the one in the middle? It all depends on what strategy or system you're trading. And I go through and I literally draw out examples of that on a chart, drawing out all three of the different spreads and showing you why you would want to choose one over the other. It's a great webinar for any of you that are trading spreads, okay? Right now, you'd have to ask Nadex about that. Right now, they do not have weekly or monthly spreads. Okay, they have looked into doing some continuous type contracts, but nothing is officially in the works there. Okay, Ephraim, what is the number in the bid or ask column right here? Bid or offer? Well, this is the offer side. This is the price you can buy a spread for. This is the bid price. That's the price you can sell a spread for. Okay. So that's the price. All right, right here, offer size. That means there's 50 different contracts available on the offer side, 50 on the bid side. Okay, you can buy 1, 5, 10, or 50. Okay, but bid and offer is the bid and offer. I'm not really sure what your question is there. When you say what's the number, that's the price, the bid price and offer price. Okay, per spread contract. So this is where you can buy into. See, the market's at 1018. You can buy into it at 1021. Okay. So yes, Ike, if you go to our website, if you go to the Apex website, go into our forum here and just search right here under Canada. It'll pull up a couple of articles on that. Since Nadex is not offered in Canada, there are a couple options there for you. Okay. Ephraim, I'm not sure what you mean, how much per contract. That is the amount you are buying the contract for. Okay. That's all right. If you click on this contract here, you see the price is at the underlying market is 1016. You can buy in at 1019 or at 1014. Okay. As far as what's that going to cost you per contract in margin, okay, that's right there. If you select it and say you want to buy it, it'll show you how much you're putting up right there. Or like I showed you earlier, it's all simply listed out for you right here on the spread scanner, okay, to show you what your margin would be. Okay, so Well, yeah, you could do that, absolutely. Okay. All right. So, all right, that's spreads in a nutshell. All right, and that's the first thing you want to keep in mind is giving yourself enough time to be right. All right, so like for example, and it all depends on your strategy or system. You know, what are you trading? The strategy or system you're looking at, the strategy or system that you're looking at, is it a short-term strategy, like it's showing you the immediate trend of the market? Is it a longer-term strategy where you're looking at like hourly bars or daily bars? You're looking for the overall longer-term trend. You know, if you're looking at like hourly and daily bars and you're looking at longer-term trends, then you probably don't want to be looking at spreads that expire in a few minutes or even 1 hour. You probably want to be trading the daily spreads that give you till 3 o'clock tomorrow to be right. Okay, if you're trading the immediate, you know, trend of the market, you may not need something that goes till 3 o'clock tomorrow. Granted, you can close it anytime you want, but first of all, really just depends on, you know, what type of strategy or system you are trading. Okay, so that's the first thing. Give yourself enough time to be right. But the main thing I want to talk to you about tonight is a lot of you are binary traders, and a lot of you like the fact that, well, hey, even if the market just moves a little bit, you know, I can make, you know, a lot with binaries. Possibly so. But also, even if the market just moves 1 tick or 1/10 of a tick against you, okay, it can be the difference of all or nothing, as opposed to when you're trading spreads. If the market goes against you a few ticks, okay, it's only a few dollars. And a lot of people have the misconception that, oh, well, when I trade spreads, the market has to move a lot in order for me to make money. Well, does it really? And I want to talk to you about that. And the title of tonight's webinar was Trading Spreads Directionally. Now, I don't know what type of strategy or systems you use. I'm going to reference and show you a couple of ours. Tonight is not a strategy and systems webinar, so we're not going to be getting into specifics of the strategy or system. If you have questions on it, I can show you where you can get more information on these strategies or systems. But more tonight, I want to kind of put to rest some of the ideas that I can't make money with spreads. Well, let's look at something here. Let's look at 7 to 9 p.m. Okay, this spread right here, the one right in the middle. If I want to buy this spread, okay, what do I have to put up? I got to put up 60 bucks, and I have a profit potential of 40 bucks. Now, if you're used to trading binaries and you see, okay, max loss 60 bucks, you have in your head 1 or 2 ticks difference means you make or lose that 60 bucks, right? But that's not what it means with the spread, does it? $60 is just the amount that you have to put up in margin to enter that trade. All right? If it was a binary trade and the market expired 1 tick against you at expiration, you would lose all 60 bucks, correct? Everybody get that? Everybody understand that? If you bought a $60 binary and the market expired 1 tick, 1/10 of a tick below your strike, you would lose the whole 60 bucks, right? Well, let's look at this on a chart real quick. Euro dollar. Let me just check out thought I had a euro dollar. Okay, hold on. Let's switch over here to, let's go pound yen. Let's look at pound yen, right? Okay, if I want to trade this spread here, I want to buy it, or let's see here. It's here 9 p.m. Let's look at this one even. Okay, so I want to buy this spread. I've got to put up $42 to buy this spread, right? Okay, well, let's look at a pound yen chart real quick here. And let's see, where is the market right now? Let's do current price. Okay. So right now, pound yen is at 161.10. Okay. So where would the market have to go for me to lose $46? Well, it'd have to go 46 ticks below this, right? It'd have to go all the way down here. If I see the market going down against me, do you think I'm going to just sit there and let it go 46 ticks against me and just watch it go? No. If I see the market going against me and I was wrong, I'm going to get out of the trade, right? I'm going to get out of it, okay? I want to show you something real quick here. Now, again, I'll show you where you get more info on this, but this particular chart right here, this is what we call our iZone sharpshooter system, all right? You see this, you see right here, see this orangish red colored shade here? Like you see one here, you see one here, see one here. So we call it an iZone, right? An institutional zone. It's a high kind of volume, support resistance level. The market is coming off of one of these high levels. Right here, we get our arrow showing us a valid entry going short, and all of our other indicators are turned red. It's a real easy, simple. Red, all red means sell, all green means buy. I want you to see the time on this. What time did that happen at the bottom there? 1904. Do you see that? That was 7:04. That was an hour ago. That was while we just started this webinar having all our problems, right? So let's take a look at something here. What was the price over there on the right-hand side? 161.64. Can everybody see that? And where's the market at now? 161.11. What is the difference right there? About 50 ticks, right? Does everybody see that? Everybody see what I'm talking about? So when we got this set up to sell and I had sold a Nadex spread, where would we be at right now in profit on one spread? 50 bucks. What if I had sold 10 spreads? Where would we be at in profit right now? 500 bucks. In the last hour that we've been talking here. Okay? So just one spread, putting up, what was that a second ago, 40 bucks? Would be up $50 in profit right now. Okay, what I'm trying to get across to you here is people have this idea that, oh, I can't trade spreads at night, or I can only trade spreads when there's big moves. Okay, well, 50 ticks, boom, right there on pound yen. What else is open right now? Euro yen. Here's a little bit different system. This is what's called our alchemy system. This is our alchemy system. It's also a directional trading system. What do we get? Which is very simple. This line comes over this line, makes an X, everything's red, we sell. Right here, it made an X at what time? What's the timestamp down there? 1927, which was basically about 7:30, right? What was the market at? 124.75. Where's the market now? 124.51. All right, so we'd be up about 25 bucks on that trade right now. On euro yen, see that? What else is pound dollar? Okay. Haven't had a new entry yet tonight on pound dollar. Look at the one we had this morning at 10 o'clock. All right, with the green crossover, everything lining up. 41.64. We got out of that trade right here at 4,200 ticks. Boom. On pound dollar today, 100 ticks, 100 bucks on one spread, 500 bucks on 5 spreads. That's a alchemy chart right there, Eric. What other charts do we have open here? Pound dollar. This is YM. This is the Dow from earlier today. I don't know, what is this? This afternoon. Bam. Had one right there at 17,030. Came down here to just under 1730 bucks. What I want to get across to you here, okay, is yeah, some of these are some pretty big moves, but they don't always have to be huge, big moves. There's nothing wrong with, let's go back to pound dollar here, or what was it we were looking at? Let's go back to this pound dollar, okay? When you're watching some of these charts at night, even at night, okay, you don't always have to bank on or wait for huge $300, 300 tick moves, okay? I mean, just look at this chart right here from pound yen today, okay? See the date? This is today. This is just this afternoon even. I mean, right here, we had a short. So let's go short. That was at, see the price up to the right over here? We'd have got in at 162, about 162. Took that trade all the way down here to here. Got out at 160, 165. All right, so that was 35 bucks. Boom. Not huge, but hey, there you go, 35 bucks. Bam, then we take a long right here that kind of popped up and then came back down with about break even on that trade. A little long one here, came down, probably break even, or maybe we were down 5 or 6 bucks. But then boom, look, we took this one here, 160, 164, followed it all the way down to where we are now even. Okay, that was the one I just showed you earlier, and we're up, what was it, about 50 bucks? So what you have to realize with spreads is, and somebody mentioned this earlier, okay, well, when I take a spread that's, 12 hours out, I mean, the market can go up, the market can come down. Absolutely, the markets can go up and down. But if your strategy or system is showing you the immediate trend of the market, okay, like right here when it came down and boom, maybe you got 20 or 30 points out of it. And it came up, you got 15, 20 points out of it. In and out, in and out. All right, sometimes they're in and out quick. Sometimes you get a nice big run, okay, like right here. Morning time trade, 161.47. Took it all the way up here to 162. Got about 50 ticks out of it. You might get big, huge run, 50 ticks, 100 tick, 200 pips. But even if you're only getting 15, 20, 30 bucks and you're out, 15, 20, 30 bucks and you're out, okay? And that's just on one contract I'm talking about. Even at night, 15, 20, 30 bucks, I get out. That's on one contract. What if you're doing 2? What if you're doing 5? What if you're doing 10? And I know some of you are like, oh man, but I don't want to get into that trade, and I got in that trade and it came up and I got 15 or 20 bucks. And now when I got 15 or 20 bucks, I don't want to do that. I want to get a binary, and I want to buy the binary for like 30 bucks, and I want to have it expire worth 100, and I want to make 70. Or I want to buy, I don't want to mess with those spreads getting 15, 20, 30, 40, 50 bucks. I can buy a binary for 60 bucks, and if I'm right, it'll be worth 100, and I'll make 40 bucks, even if the market only moves a few dollars or a few points, few pips. Well, that's true. But what happens if you buy that binary for 60 bucks and then the market goes against you 1/10 of one tick at expiration? What did you lose on that binary? You bought a binary for 60. The market goes against you by 1 pip at expiration. You lose the whole 60 bucks. What if you put in $60 to get into a spread and the market went down against you 20 or 30 pips? 20 or 30 pips is a big amount. How much did you lose? The market goes against you 20 pips on a spread. Yeah, 20 bucks. 20 bucks. So that's the difference there that you have to keep in mind of, oh, I just want to buy a $60 binary and the market can just stay a point or two, a tick or two above my strike and I'll win. Okay, yeah, but what happens when it goes 1/10 of one tick? What happens when you get into a binary because you think the market's going to go up or down and it just kind of tweeters there a little bit, and that expiration happened just to boop, pop right below your strike. You lost all 60 bucks like that. The market, you could be wrong and the market come way down against you on a spread. It's 20 bucks, right? So when you look at that in comparison of, is it that big a deal or is it that bad of a thing to trade spreads, for example, on, oh, let me fix this. To trade spreads on example where, okay, here, all right, here I went long, all right, at 160.77, then I got out at 160.88. Okay, well, that was only 10 or 12 bucks I made. But then boom, I went short and I got 15, 20, 30 bucks out of it. And here we went short and we 161.14 and I stayed in it till down here, so that was 34 bucks. And right here I went short and here's 160.91, but then the market came up against me, got out at 74, so I only made 14 on that one. Okay, does that make sense? The risk management, yes, Jim Bob, the risk management is so much easier on Nadex spreads. And even sometimes you'll have trades where, okay, here, market was going down, I got 167.01, 30 or 40 pips out of it. Right here, going up. Notice the time here. This is nighttime trading I'm showing you right here. Okay? Right here, market's going up. I got in at 160.66. I wrote it up, got out here at 160.95. All right, I made 30 bucks on the spread. Okay. Some of you are like, yeah, but if I got to put up 60, 70 bucks to get in there and make 30, I don't like that. Really? You don't like? Okay, there I made 30 or 40. Boom, there I made 30. Boom, here, about break even. You know, or here, oh, I got into this one and it came right back down and man, I got in right here at 161.23. Then I got stopped out at 161.14. Oh man, that was a loser. You got in at 161.23. You were wrong. The market went against you. You got out at 161.14. 23 minus 14 is how much? 9. You lost $9. $9. Okay? The binary goes against you by 1/10 of one tick and you lose what? 50, 60, 70, 80 bucks, the whole thing. So yes, you're always, no matter what strategy or system you have, you're going to have some trades that are break even, or some trades you only made a few bucks on, or some trades that go against you, like that one right there. Hey, I bought in right here, but the market came down, I didn't get out to right here. Okay, 9 ticks later, it's 9 bucks. But how many times we go over and say, okay, boom, there you made 15, there 50, there 30. Okay, I mean, we keep going on this chart. And keep in mind, all right, here's another one popping up, 10, 15, 20 ticks. All right, that one maybe break even. That one here, maybe break even. Boom, that one came way up. You got some good stuff out of it. And guys, keep in mind, this is just one chart I'm showing you. This is just pound yen. All right. Doesn't mean you can't watch 3 or 4 other charts at a time, right? And oh, okay, boom, got in a spread there, and you know, it went up, what, 15, 20, 25 pips. This one went down 10, 15. That one, maybe lost a few there. That one, what, 160.68, got out at 167. Okay. A lot of people are so stuck on this idea of real quick money to throw into a binary let me throw 50 or 60 bucks and let it expire at 100. But you also have to realize how many times do you throw 50 or 60 bucks at a binary and it expires at 0. Okay, and with a spread, it's not all or nothing. And you can give yourself more time to be right, and you let the market can go against you so much further, and you still lose so much less. But so when you think about that, and you think about your characteristics that you have and the high amount of leverage you have, and then when you think about multiple contracts, all right, 15, 20, 25 bucks, 30, 50, 30 or 50 bucks here really starts to add up, doesn't it? Right? Now, what's the other thing that can go wrong with binaries? Well, with binaries, let's just say that it's 10:30 in the morning right here. Okay? See that? It's about 10:30 in the morning. And right here we've got an entry to go long. Well, some of you might say, hey, I want to buy a binary, but it's 10:40, 10:30, 10:40 in the morning. I don't want to do an 11 o'clock expiration. I want to do next hour out, 12 o'clock, because I want to make sure to give myself some time to be right, correct? So you go in and you buy some binary right in here. Market's going up, market's going up, market's going up. You're feeling good, right? So you spend 70 bucks on a binary or whatever, wherever you buy in at. Market's going up, you're good, right? You're feeling good about things. You just want it to stay above that by noon. Well, what does the market then start to do? Look at the time frame. Where is it at noon? It's way back down here, right? So like the market was going up and up, your binary is looking good, your binary is looking profitable. Oh wait, it's coming back down, it's coming back down. Then what happened right here at expiration? Does everybody follow me this example here? Probably it might have ended up losing, right? By 12 noon. Everybody see what I'm talking about? Because your strategy system said the market was going up. You bought a binary somewhere in here. You're feeling good about it. It's going up. It's going up. Oh man, it's going down, but I'm going to hold it. Wait, it's getting close. I'm going to hold it. It's getting close. I'm going to see. Noon comes. Expiration hits. Binary expires. Worthless. 0. And you paid what? 60, 70 bucks for it as an example, right? So you lost the whole what? 60 bucks, didn't you? That makes sense? What happens if you were trading a spread? Going with the immediate direction of the market. What happened in this example? Market's coming off a buy zone. We've got our green arrow. Everything's green. Boom. Where did we get into the spread at? 159.90, for example. See the price? 159.90. We followed it all the way up, and then we got out at 160.32. So 32 down to 90 was what? 42 pips that we would have made on that spread going long, right? So if I'm trading a spread, I just made 42 bucks and got out. You're holding on to your binary to lose 60 bucks. But then what did I do? Not only at the same time when I got out of that spread, what did my system tell me the market was doing now? Boom, market's going short. It's going down. So I already got into this long trade, got 42 bucks, got out. Then I'm getting into this short trade at 160.30, and I'm taking the market down, and I get stopped out about 160.02. So I made another 27 bucks. So I took the market going up to make 42 bucks. I took it down to go make 28 bucks. I made 60 something bucks and you lost 60 bucks on your binary if you didn't get out. Does that make sense? Because like someone brought up earlier, well, the market, you know, with the binary, you think the market's going up, so you buy here and it goes up, oh, but then it comes back down. But you're stuck in that position, hoping it comes back, hoping it does what you want it to, instead of, what did the market say to do right here? Go short. I took a spread and I made 20 bucks. Right here, I'm going long, I took it and I made 40 bucks. Now it's going short and I made 28 bucks. I'm mirroring the market. When the market's going up, tick for tick, I'm following it up tick for tick with a spread. I'm trading just like I was trading the market itself. Or like if I'm not trading a statistical instrument like a binary that's an all or nothing, 0 or 100, based on time till expiration, and so on. You know what I mean? So, Yehuda, do you have an early X option with the binary? Yeah, you could have. I mean, if you had bought this binary, and as the market's going up, your binary value was going up, and you got out of it, then maybe you would have been okay. But would you have gotten out of it? That's up to you. You know what I mean? Mike, would I have, in that situation, would I have used the same spread? Possibly not, because right here after, with this short entry, that was at 11:18, which means at 11 a.m. a whole new set of spreads opened up. So I might have actually picked a different spread because a new one just would open up. Okay. I mean, a lot of times you can get right back into the same spread, but when you have new ones open up like that, you might be getting into a different one. Okay. Let's see here. Ahmed, well, that's part of, I mean, first of all, you don't want to be over trading your account. You know, the question was if you got into a longer term spread and there was some big news announcement that really shot the market crazy. Well, you don't want, first of all, you don't want to be over risking your account. Secondly, if you're going into trading like an NFP report, you know, I would not suggest getting that super long spread that has a big wide range. You know, I would tell you that you'd want to get more, you know, a spread that's closer to a floor or ceiling that's not going to be as risky. You know, like for example, you might want to get in on, let me refresh these so the newer ones come up. Forex spreads, $1. You know, you'd want to more make sure that you're getting into a spread that, okay, you know, if I'm going to buy or if I'm going to sell based on some big news event, you know, I'm only risking, you know, $12 a spread or 50, you know, a lower risk spread, and then maybe I'll do multiples of them. Okay. But I don't think, yeah, you wouldn't want to be tying up your account with those longer term spreads like that. Okay. So, so guys, I'm not here trying to promote to you one system or another. You may have your own system that you use for, you know, directional trading. I'm just kind of giving you an idea of some of the ones we use, you know, that give us, you know, these short trades here, or this short trade here going and getting 20, 30 points, or this long trade here. But directionally trading these spreads, I know a lot of you always ask about, well, what about trading news events and straddles and strangles? And that's why I'm just talking here about just trying to simply scroll through some charts and show you just directionally trading spreads, just following and mimicking the market, which is also a lot easier for a new trader to be able to learn how to follow and mimic the market. And when your indicators let you know the market's going up, the market's going down, learning to trade the market. Trend is your friend. Learn that trend. That's a lot easier to do and trade and mirror the market $1 per tick, as opposed to being brand new and maybe trading outright futures contracts for $10 a tick or $32 a tick on bonds or something ridiculous. You can trade the market $1 a tick and learn the market, learn how to read charts, learn how the market moves, as opposed to having to really dig in and try to understand Nadex, some of the binaries and out of the money binaries. You're going to have time decay. The closer I get to expiration, and the price can move further against me, and the prices can move against me really fast on a Nadex binary when it comes close to expiration. What? Huh? What did you just say? Exactly. Dollar a pip, dollar a pip, dollar a pip, dollar a pip. Okay? Spreads, that's why I said earlier, spreads are a lot easier to trade because I'm going long. It says to buy. I buy. As the market goes up, dollar, 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 dollar. Market goes down, lose a dollar, lose a dollar, lose a dollar. It's very, very easy to mimic the market and trade with spreads. And you take out some of the, complexities of some of the Greeks of options and theta and beta and gamma. You have some of that in spreads, but nothing like you have with binaries, especially like with 5-minute binaries that move so quick. And the market can just do up and down. The market do all kind of little stuff in 5 minutes, right? Even with this, see this big trend here where the market goes to get in and buy. We bought in here at like 157.70 and rode it all the way up to like 158.50, made $70 on a one spread. Boom. But yes, the market had come up, and then wait, it kind of popped back down. What happened if right here you got into a binary and you bought some binary that was up here? Look what happened, and the binary expired. Look at the time, 9:55, and you bought a 10 o'clock expiration binary. Market's coming up, 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 up. Oh, but it came back down. It came back down right at my expiration. Your heartbeat is freaking out, isn't it? You ever done that? Like, okay, the market's going up, so I'm going to buy a binary somewhere up in here. And it expires at what? 10 o'clock. Look what happens right before 10 o'clock. Those bars start to come back down, right? And you're just like, oh boy, right? Your heartbeat's going crazy. You can't sit straight. If you're a smoker, you're lighting one up, or you're pouring the vodka at 10 a.m., right? Exactly. Because why? Well, look, where did the market get to? What was the high right there? 157.89. You see it? Everybody see that price over on the right side of the chart there, right? 157.89. Then what happened? Market kind of came down. What was the low it got to? 157.71. What's the difference there? 71 to 89. 18 pips, right? 18 bucks. So when you're trading a spread, and you got into that spread right here at 157.66 or 157.69, market comes up, then it comes down here to 71. You're still $1 or $2 up, aren't you? But that binary that you bought for 60 bucks, all or nothing based on those two little bars. Does that make sense? You're freaking out on that binary because it's all or nothing based on a couple of bars. But what is the spread? You're about break even or a couple dollars down. And then what? It pops up and keeps on going. You don't have that heartbeat going crazy binary feeling. You don't have that, OMG, it's all or nothing based on these couple of ticks. What's going to happen? What's going to happen? It's right at 10 o'clock. It's going to expire. Please, please. And then you become like a super spiritual person, right? And you find yourself praying all the time, especially right before expiration, right? And you're just like, come on, just let it come back up a tick or two right at expiration. I just need 1 or 2 ticks. That's all I need. 1 or 2 ticks, you're freaking out over make it or break it, all or nothing over 1 or 2 ticks. The market goes down 1 or 2 ticks on a spread. What is that? $1 or $2. You're not freaking out. You're not having a heart attack. right? A few ticks is a few bucks, as opposed to 1/10 of a tick being everything all or nothing. You know what I mean? So that is what I'm trying to get across to you here, is that spreads, yes, spreads are fun. Spreads are easy. They're fun, but they don't have to be that heart attack, drive you crazy fun. If you're that adrenaline junkie that, you like skydiving and jumping out of airplanes and doing crazy stuff, maybe you'll love binaries. Hey, forget it. I've got too many grays as it is. I don't need any more. If the market's going up, I'm going to go with it $1 per tick until it tells me to get out. And when it goes down, I'm going to go with $1 a tick. And if I want to do 5 spreads at a time, so I'm getting $5 a tick, or 10 spreads at a time, so I'm getting $10 a tick. I mean, this trade right here, what did we say? We'd get in at about 157.70. We follow it all the way up till it comes back and breaks these predictors. We got out of it 48, so about 70 bucks. So one spread, I got 70 bucks. If I had done 10 spreads, I got 700 bucks. From what? From 9:55 to 10:30. About 40 minutes. 40 minutes of a morning, I'm up 70 bucks on one spread or 700 on 10 spreads. I'm pretty happy, right? I'm pretty happy. And all this stuff, guys, that I'm showing you here, here's another short. We went short, took it all the way down to here. Here's another long. We took it all the way up. Like, this is one chart. This is one chart. Pound yen. I mean, you can look at 10. I think Nadex has, what, 8 other Forex pairs with spreads on them. You've got commodity pairs. You've got all the different stock indices. There is plenty of trading opportunities just trading spreads, whether you're trading them daytime or nighttime. Okay? And I think you all see the power of them now with the capped risk and limited risk, and it's not like a binary where it's all or nothing going to freak you out and blow your account real quick. You learn the markets, you learn to trade along with the markets, how to mimic the market dollar for dollar. Check out these spreads, okay? So just to kind of wrap up, I'm sorry we got such a late start with our tech issues earlier. If you are on the Apex website, and again, now you also see a little more why this is so nice to have, this spread scanner. Because if I'm watching a chart and I'm seeing that I'm about to have a setup, like, okay, maybe I'm about to get a short on pound yen. All right, well, I've got the scanner here, and I'm clicking pound yen, and okay, there's all my options for pound yen. Which spread do I want to use? Well, I don't want to use these spreads that tie up 200 bucks, maybe $50 a spread. I can do that. I've got X amount in my account. I can handle doing 3 or 4 spreads. I can handle that. Let me get that spread. Go. It's all right there in front of you. Okay. So hopefully I've opened your eyes a little bit to spreads and some of the benefits. If you really want to jump in and learn them, you can do that and take advantage of free education. Hop on over to the Apex Investing website. Right here under Education, go to Nadex Spreads. Everything is right there. Open an account with Nadex, open a demo account. Spreads 101. What is a spread? Learn how the spreads work. Learn how the risk reward works, proximity, premium. Learn everything about a spread. Know what a spread is and how it works. Okay, great. I got that. I understand a spread and knows how it works. What do I do with it? Well, here are some trading systems. Some of those ones I just showed you on the charts. Some eyes on sharpshooters and alchemy. And okay, great. How can I check those out? And trade rooms and the scanner. Follow all these steps here, and it'll give you some great information and free education about trading spreads, okay? And I know there was a few questions in here that you guys had about, oh, well, what about that system, or what is that chart? You can check all that stuff out right there, okay? I'm just looking over any questions here that I might have missed. I know some of them I ended up getting to there. Showing green candle, the person. Ben, on the chart you see on the up and down retracement down showing green candle. Yep. That's a special indicator there, Ben. It's not painting the bar colors based on an up or down close, but based on a choppy and it's letting you see it's coloring the bar color based on the trend, not the simple up or down close. Okay, on that particular one there. But if it goes against you, there's nobody to take your contract to exiting solution. There should always be somebody on the other side to take your trade to exit early, as long as you're not trading within the last like 2 minutes before expiration. Those last 2 minutes before expiration is called the dark zone, when the market makers pull their contracts there. Okay. Dan, what would you say is a good stop loss in a spread? I know you use your trailing stop with the programs, just for someone using a basic chart. That's really a tough answer to give you there, Dan. All the systems we use show us an exact stop, of, hey, this is where you get in and you trail your stop until the indicators flip a certain way, then you get out. I'm always trading what the chart tells me to trade. Your question was someone just using a basic chart, what's a logical stop loss? I don't know how to answer that without really knowing what chart you're using. Are you using 1 minute bars, 5 minute bars, 10? Are you using, tick bars? What's your profit goal that you're going for? If you're like, well, I'm going for 20 ticks profit to make 20 bucks, but I'm going to use a 50 tick stop loss. Well, then that's not a good risk reward ratio. You know what I mean? If you're risking 50 to only make 20. So I mean, you might say, well, I want to keep a 1-to-1 ratio. I'll risk 20 to make 20. If I'm risking the same amount as what I'm looking to make, well, as long as I always have 60% or a better win rate, then I'll be profitable. I mean, you could look at it a couple ways, but I would suggest you try to, get a little more scientific about it there, a little more systematic about it, of, not having it based just on a number, meaning don't trade your P&L number. Don't let your profit or loss, when you're in a trade and it shows that you're up X dollars, or you're in a trade and it shows you're down X dollars, don't let that dollar amount mentally, emotionally, or psychologically control your trading and say, oh, I'm going to exit a trade because I'm down X dollars and I don't like how that feels, or I don't like how that scares me. Don't exit a trade just because of a dollar amount necessarily, but exit a trade based on your chart telling you to exit, meaning, okay, well, I use a basic chart with X indicators to tell me to go to buy. The market's going up. Well, okay, now some of those indicators turned around and they're going the other way. You may still be profitable, or you may only be down 10 bucks, but everything's telling you go the other way, then get out. Even if you're like, well, my stop is 30 ticks away and I'm only down 10. Well, you might only be down 10, but everything on the chart's telling you the market's going the other way. You need to not only get out of the trade you're in, but do what the chart's telling you to, and now go short and sell. You know what I mean? I don't know if that really helps answer your question, but it's not really how I trade, just a number. I just try to do what the chart's telling me to do, Raul, I would definitely watch the choosing the right spread misconception webinar before getting going with that. Make sure you have that down before you do that. Okay. Do you think you should trade spreads even though no stop loss? Matt, I'm not sure what you mean by trade spreads with no stop loss. Maybe if you can clarify that question, I'm not quite following you there. Yes, once again, we're going to find, oh yeah, this right here under the forum. If you go to the Apex website, right here, Help Desk and Forum, go to Trading Questions Forum. Scroll down towards the bottom where it says Watch Webinars Here. This webinar we did right here will be posted right here under Newest Webinars. Okay. And once again, if you go right here to Nadex Spread Webinars, the webinar you all need to watch. If any of you have any interest whatsoever in trying to directionally trade some Nadex spreads like we mentioned tonight, do not do it, do not start to do it until you watch this webinar right here. Well, what you need to do is watch the whole training course that I showed you, okay? But in particular right here, common misconceptions with Nadex spreads, because this will show you the mistakes that you're going to make and how not to make them. This webinar right here will save you hours of frustration and tons of money by not making the mistakes that I cover in here. And it will make a ton of light bulbs click for you, trust me. Okay, definitely take the time to do that. So let's see here. Yep, Jim Bob made all the difference, right? I think that's the webinar where I drew out on the chart, right? Jim, I drew some boxes and I said, okay, here's this spread and here's the other one. Here's where you can buy into this one. Which one is better? Do you want to do this one or this one? Like I literally just really drew it out and made it very visual. And it was kind of like oh, light bulb, got it. Now I see what I was doing wrong. Okay, gotcha. Gotcha. Yeah, Matt, that's not a way I trade. I don't walk away from my chart when I'm in a trade. Okay, and I'm not sure what you keep talking about with stop losses. If the market goes against me, I'm getting out. I'm watching my trade. I'm not going to get into a trade and just let it go and walk away from my chart. If I get in a trade, I'm watching that trade. I'm going to get out when I need to get out, take my profits when I need to take my profits, or take my stops when I need to. Someone says, okay, one more time, where's the course? If you're on the home page of the Apex website, it's just right here. Elite Education, Nadex Spreads, and just start going through all of these. It's right here, Nadex Spreads 101. Okay? All right, guys, sorry to keep y'all so long and sorry for the tech issues earlier. I'm going to go ahead and shut it down here. I hope this just kind of opened your eyes a little bit to some opportunities out there. I know it wasn't a long, in-depth webinar about strategies and systems. It was more of a, hey, change your mindset, start thinking about spreads. There's a lot of opportunities, and just wanted to open your mind up to that and then show you, hey, now that your mind's open to it, here's a place where you can go to get absolutely free education on exactly how spreads work, how to trade them, what to do, what not to do. Take advantage of the new light bulbs turned on in your head. Take advantage of the free education here about how to trade them. Hop on the Nadex, get a free demo account, start practicing these things, learning them, master them in demo, then move on to live and start trading them. Okay? All right, guys, you're very welcome. Thank you so much. I appreciate you taking the time as well. Rahul, I would tell you to do the iZone Sharpshooter course.